There is so much your broker doesn't know about your trading. Your broker doesn't know which timeframes you are trading. Your broker doesn't know which setups you are trading. Your broker also doesn't know when you're breaking your trading rules and how disciplined you are in your overall trading. And without knowing those details about your trading, looking at your broker data and hoping that you will find a way to improve as a trader is nearly impossible. And that's where a professional trading journal comes in. So of course you can import all of your trades into Edgewonk from your broker. It just takes a few seconds, but spending a few moments with your trades and actually tagging them and writing down if you broke your rules or if you followed your trading rules and what kind of strategies that you are trading will unlock a wide variety of new trading stats. So for example, here we are in the efficiency graph, and what we can see is that in this journal we have 37% of trades without a mistake. But what we see here is even more interesting. Only 43% of our winners have a trading mistake, whereas 92% of our losers have a mistake. So when we make a trading mistake, for example breaking our entry rules, taking a wrong exit, or mismanaging our trades, we are more than twice as likely to end up with a losing trade. And this is something that, although many traders might expect, unless you see how much trading discipline and deviating from your trading plan is impacting your trading performance, you will not experience those aha moments when your actual trading data shows it to you. But there's much more here. So when we are in our trade management graph, we see that we have 36% of our trades were managed correctly and 64% of our trades were managed incorrectly. And this means typically cutting winners too soon before the take profit has been reached, or letting losses run past your stop loss and just letting small losses turn into a big loss. This is already very insightful, but here you can see how it has an impact on your trading performance. So by mismanaging your trades, you are losing 46R or risk multiple. When we see here that we have an overall realized R multiple of 60, if we would not have mismanaged our trades, we would have had an 80% increase in our trading performance. And this is really where a professional trading journal like Edgewonk shines. You do have your raw broker data, but spending a few minutes going into your trades and tagging and actually saying what happened can really unlock a whole new level of insights that you would not see any other way. So a trader who sees something like this will then realize that if he would have just trusted his system and not mismanaged his trades, he could have been much more profitable than he currently is. Sometimes this can even make a difference between a losing and a winning trader. Maybe you're trading different time frames and you've always wondered which time frame is the best. When you just look at your broker data, your broker obviously doesn't know which time frame that you are trading. But in Edgewonk, you can actually assign a time frame to each trade. And then here we can clearly see that the daily time frame is not working for this trader at all. He's losing significant amount of money. And he's doing much better on the lower time frames. And those insights really help you to uncover your strength as a trader. So a trader like this probably has a hard time with a slower moving daily time frame and is much better suited for the action on the lower time frame. And his edge is really on the lower time frame, as we can see here. Or maybe you're trading different price patterns, or you're using indicators or chart patterns. Your broker obviously doesn't know which pattern you are trading. But in Edgewonk, you can assign patterns to each trade, and then you can get very important insights into the profitability of each pattern. So here we can see when there's no pattern and the trader takes a random trade without a pattern, he's losing money. A triangle is barely break even, just slightly winning, and the same goes for the head and shoulders. But then there are other patterns such as the wedge or a range or even the inverse head and shoulders, which are making more money. And again, this helps you to uncover your strength and also to weed out the parts of your trading that are not generating any profits, so you can streamline and keep improving your overall approach to the markets.